a lot of the oil that gets produced can be exported from one country and then re-imported because they just don't have the right types of refineries to meet the type of oil production that's currently being produced. So all of these things add a layer of complexity where you don't just have the oil price being disrupted, you also have the connections between different types of oil being produced and the oil that can be refined there being disrupted as well.
Hello and welcome to the MoneyMagpie Invest podcast. I'm Jasmine Birtles, founder of MoneyMagpie.com. And before we start, do remember to subscribe, like, comment, tell all your friends how wonderful we are. Now, I'm very pleased to say that I've got friend of Money Magpie here. Again, we've got the wonderful, the fabulous Nick Hubble, who is the editor of the Fleet Street Letter, which is produced by South Bank Investments. And I'm very pleased to have Nick because it's always so helpful to hear what you have to say. Hello, Nick.
It's good to be back. I don't know if today's going to be very helpful. It's going to be a bit more scary, I think.
Uh, I mean, this is the way the news is at the moment. I know people who have not looked at the news for the last 2-3 months because it's just too much for them.
Yeah,
It's the economic.
usually it's my job to find the interesting or the useful angle, right? The way to at least position your investments to try and protect yourself or profit. But today's session is going to be an interesting one.
Well, let's dig into it because you and I have been talking about the oil price, but it seems that there isn't a the oil price. There are several of them. Weird.
Yeah, people would know about this from the way that you have the Brent and the WTI, the West Texas Intermediate, oil price quoted. So then they're sort of aware that there are at least two oil prices in the world, but it turns out that actually there's loads of different types of oil price. And one of the things that's been happening over the last few months because of the war in Iran, but also before that, is that the different types of oil prices have been diverging from each other. And this is where the stress that Hormuz has caused is really showing up. And that's kind of hidden from most people's awareness by the way the media just reports on these two WTI and Brent oil prices.
Yeah.
So, for example, the oil price inside Russia or in Venezuela or inside the Strait of Hormuz, on the edge of Iran and in Dubai and all these places, those oil prices are massively higher and lower than what you'll see on the news. And so it's very misleading to think that, hey, the oil price hasn't gone up that much considering what's going on at the Strait of Hormuz and in Iran and all these other places that produce lots of our oil. When really what's going on the ground, which isn't covered in the media, is very different. So obviously you've got a very low oil price within the Strait of Hormuz because people there can't get the oil out. And in the places where the industries used to rely on the particular oil that came from the particular part of the world that's in trouble right now, you have very high prices. And so the stress is not really perceived or is being hidden by the way the media covers this. And there are people out there who are struggling under oil prices above $200 a barrel, vastly
Wow.
higher than what we see. So I think people need to be aware of the fact that even if the news media is not panicking about the massive oil price spike, parts of the world are suffering under it.
So also there are different types of oil, and of course those are going to have different prices, aren't they?
Yeah, the stress here is that different types of oil have to be refined in different ways and they produce different types of products. So we're sort of familiar with this because of what happened with the shale oil revolution in the US. The US refineries were built to refine different types of oil to what was suddenly being produced at a large scale by the shale revolution. And so things had to be sort of moved around and reshuffled. And that's why a lot of the oil that gets produced can be exported from one country and then re-imported because they just don't have the right types of refineries to meet the type of oil production that's currently being produced. So all of these things add a layer of complexity where you don't just have the oil price being disrupted, you also have the connections between different types of oil being produced and the oil that can be refined there being disrupted as well. And so, we've had this problem with jet fuel, for example. That's one example of this where people need to be aware of the fact that it's not just the oil being produced, it's also the matchup between the types of refineries you have and the type of oil that's being produced. And so far, we've had sort of enough oil of each different type available in the world, But as the particular type of oil that comes out of the Middle East, through the Strait of Hormuz, is disrupted, the other refining areas of the world can't just, pick up the slack. They can't just deal with the other types of oil that are still being produced. So the flow-on effects, the domino effects, are actually a lot worse than just, the oil supply is disrupted.
And then there's politics, because we don't know what's going to happen. I mean, you never know with Trump anyway, but you could, on the one hand, things could sort themselves out very quickly. Everybody goes, oh, that was a silly thing to do. Sorry about that. We'll stop that. Or it could just drag on.
Yeah, the oil price usually is all about supply and demand, right? So the idea is that, as more supply goes on, that means the price has to go down a bit in order for supply and demand to meet. Or if there's a demand increase, then the price has to go up. So it's constantly balancing supply and demand, trying to find an equilibrium between the two. But what's going on right now is sort of a bizarre story where you've got two extreme scenarios that are very different. One is where the disruption continues, the war continues, the oil does not flow through the Strait of Hormuz. The other possibility is that, the Mueller and President Trump become best friends all of a sudden, and everything's just fine again tomorrow. And I don't know what the probabilities of those two are. Say one's a 30% chance, the other one's 70% chance. Well, what the oil market has to do is balance these two scenarios. And that creates a bit of a problem because, on the one hand, the oil is not flowing. But on the other hand, it could just suddenly start flowing again tomorrow. So the price that's being set is somewhere in between these two scenarios. And that's a bit of a problem because the oil price has not gone up as much as it should, given the fact that the oil is not flowing through the Strait of Hormuz. But given the fact that it could all just be unlocked tomorrow, unclogged tomorrow, that's why the oil price hasn't gone up so much. So if we think about this in terms of how markets usually work, if the oil price went to $200 a barrel around the world tomorrow, we'd be no longer booking our summer holidays. We'd respond. We'd be rationing our oil. We'd be canceling flights. The world would deal with the problem. But because the oil price hasn't got up to $200 a barrel, because there's still this chance of everything being okay tomorrow, we haven't had this panic yet. We're not rushing to produce as much oil as we can out of the North Sea. So the world hasn't responded because there's always this probability of things being okay tomorrow. Well, eventually, as this continues to drag on, that's going to leave us in a bit of a problem where we haven't responded to the oil shortage because the price hasn't shot up yet, but we should have. And so, if there is an oil price spike coming, it will be even larger because we haven't been careful over the last month or two in how we responded to this.
And you've also written that the oil supply chain is long. I mean, it's kind of a similar point to what you've just made, really. But really, you're saying we're coming to the point now where things need to change.
Yeah, if you think about it quite simply, it takes a long time for oil to arrive. The oil that goes through the Strait of Hormuz goes all over the world. There's a delay factor, therefore, in when the oil stops coming out of the Strait of Hormuz and when the last ship arrives. So you have this grace period. There's a second grace period, which is where the storage facilities are able to supply the oil we need. That's the point we're at now. We've had not much of a supply shock occur for the last month and a half because the tankers were still arriving. And then we haven't had much of a supply shock because the oil reserves could be utilized. But at some point, those run out too, and that's when the crisis really hits. And it seems to me that the world was gambling that the problem would be solved within those 2 months of, well, it's different for each country, but within the months where, the oil continued to arrive at the ports or the oil would continue to flow out of the reserves. And it hasn't happened, right? We've had a few false alarms of peace breaking out in the Middle East again, but it hasn't happened yet. So the size of the shock and the speed of the shock to come is much larger than you would expect, given how calm oil and financial and energy markets have been over the last month and a half. And yeah, I want to emphasize again, the speed with which the shock could suddenly occur is still possible.
And then we've got gas, because oil and gas are produced together, and gas is at a negative now.
Yeah, in some parts of the US, they're ramping up their oil production to try and take advantage of these higher oil prices and to try and fill the supply gap. But the problem is a lot of the oil producers produce gas as a byproduct. And this means they're producing so much gas that they're literally paying people to take it off their hands because their reserves are full, their storage is full. And so this has created a bizarre scenario where in some parts of the world, the gas price spiked because a lot of gas is not flowing through the Strait of Hormuz anymore as well.
Mm.
And on the other hand, in other parts of the world, the gas price is literally negative. And it's a sort of a reminder that the infrastructure around these energy resources is really important and crucial. And that's actually a really important factor in the North Sea oil story, which British politicians talk about a lot. It's not just about the oil and the gas, it's about how it moves around, the cost of doing so. Obviously a ship can go wherever, whereas a pipeline can't. And these sorts of issues matter just as much as the Strait of Hormuz and um, who sells oil to whom, how, can have just as much of an impact.
What about the oil fields as well? What's happening with them?
Yeah, there's a theory that went around, I think a few weeks ago, that what Trump is trying to do with his own blockade of Hormuz uh, relies on a fact that most people are not aware of, which is that if you want to stop producing oil, you have to effectively damage the well that produces it. Sometimes beyond repair, sometimes just it's extremely expensive to try and revive an oil well, an oil field, after it's stopped producing. So what Trump might have been doing is saying to Iran, you've now got X weeks before you have to either shut off your oil production and do damage, or you have to surrender to me. And so the Iranians are sort of hitting that point now where their storage is full and they're going to have to decide, are we going to shut down our oil wells and damage them, or are we going to give in to Trump? Um, and it creates a really powerful bargaining chip for
Mm.
Trump, and explains why, his seemingly bizarre act of blockading the Strait of Hormuz that had already been blockaded by the Iranians, that might actually make sense.
And speaking of making sense, there's a general sense of him attacking Venezuela, which doesn't sort of make sense in many recent ways, although you can make it sense from an oil point of view. Is there a wider geopolitical plan, do you think, with Venezuela and Iran and other oil producing countries that he wants to take over?
Yeah, we might be able to finish on an optimistic point here. The theory goes that President Trump has been attacking China's energy suppliers. So he went after Venezuela. He has not attacked, but he's embargoed Cuba, a trade embargo on Cuba, and then the Strait of Hormuz with Iran. All of those countries have in common that they sell oil or energy to China at an artificially low price because they're effectively sanctioned or kept out of the Western economic trading systems. They'll agree to a lower energy price. And this gives the Chinese economy massive advantage because it has access to cheaper energy than the Western economies do. So Trump, disrupted China's energy supply. The problem is that it's not working. The Chinese had lots of energy stockpiles and they seem to be withstanding the energy shock a lot better than Western economies, than Trump's allies or supposed allies, for the last month and a half at least. So if that is correct, the theory in the first place that what Trump is doing is going after China, and that it hasn't worked, then you would expect Trump to change his mind, to give in and sort of reverse some of his policies, perhaps in Cuba, perhaps in Venezuela, perhaps in Iran. He might decide that it's not working, and try something different, hopefully not more dramatic than what he's been doing. But I think there's a bit of, light on the horizon that what Trump has tried to do is not working, and therefore he's going to reverse his policies.
Well, there's all to play for. I mean, we've gone through a whole load of possibilities and might be this, might be that. Do you have an idea of when we're going to see something definite? Are we looking at the next couple of weeks as possible times for us to find some sort of something new and to go, oh, that's what it was all about then?
Yeah, we'll look back and decide which part of this video was the one that tipped things over the edge. Will it be the fact that the Iranians can't produce any more oil because their storage is full, or will it be the fact that China was withstanding the shock just fine? Or will it be the fact that the oil stopped showing up and the reserves of different governments started to be depleted? The point is, lots of things are coming to a head, and so things are going to have to change either for the worse or for the better. I'd say within the next 2 weeks. That's sort of an easy guess, though, right? Because either things go very well and a deal is done, or someone surrenders
Mm.
and the oil starts flowing, or we get the oil crisis.
Yeah.
We start to run out of the different, one of them has to happen. So I don't think this can drag on for more than another 2 weeks without a significant change somewhere. It might be a massive draconian, cut to energy the energy we can use in our flights or our homes or whatever it might be, or it might be massive, increases in oil production and in locations around the world. Who knows? But something I think has got to happen.
That'll be good. Well, thank you. Thank you, Nick. Nick Hubble, the editor of the Fleet Street Letter, which is produced by South Bank Investments. Really helpful as always. And I will be getting you back on the podcast in a few weeks' time. We'll be talking about one of the other elements of the economy that we all need to understand. Always so helpful to talk to you, Nick. Thank you very much. Do check out the Fleet Street Letter and see what Nick has to say about all kinds of elements of the world economy. This has been the Money Magpie Invest podcast. I've been Jasmine Birtles. Like, subscribe, comment. We always look at your comments, and see you next week.